Hello guys, welcome back. This is the second episode on how to determine bias. Where is price likely to move towards or gravitate to. Now last week you remember we called this move, very nice move there, and it delivered really well, handful pips. I'm sure we ate from this one. Now today I'm not interested with this move up, but I want to give you another idea here. Now you can frame your bias quickly. Now because Monday, Tuesday, Wednesday expanded higher, and on Thursday I've said sometimes and a number of the times it caps the weekly range. Therefore I am anticipating a reverse on Thursday so that Friday can trade into the range of that specific week. Now the moment price reached that 4-hour FVG, the day of the week is Thursday, likely to make the high of the week so that Friday can trade into the range of the week. Then what do I do here? The moment I see this rejection from the 4-hour FVG, then I can move down to 15 minutes so that I can frame my trade there. Now I want you to look closer here. Yeah, remember the day is on Thursday. You see that? Yeah, I hope that one is visible. This is on Thursday. Price never reached CE of this FVG, but after rejecting that, it displaced lower. You see this low here? A higher high on the left side, a higher high on the right side, and a lower low in between. That is a swing low. The moment price closed below this, look closer, there's something left behind. What is this? That is an FVG inside the expansion leg. This series of down close candle, up, high, low, high. This is a breaker, but I'm not interested with that right now. I want you to check what happened. A number of you, so after getting this, you know, you can not just press because you've seen this, you just press. Number one, we have determined where price is likely to go to and where it is coming from, right? So we have come up with the bias that price is likely, I've not said it must drop, but it's likely to drop because it's on Thursday and Friday is likely to trade into the range. Now you can target any PDRA down or a swing lows or where there is liquidity pools, right? Sell side liquidity. But now before you think about entry, so now already you know where price is likely to move to. Now before you go to pressing that sell button, you can go to your indicator tab and search for Lux Algol. Turn it on. Wow, look at that. I know some of you are like, oh yeah, look at that. It gives you clarity that this is the time London opened, this is the time New York opened, this was the overlap time. Look at this clearly here without even zooming in. You can see that London made the high of the week, caused market structure shift. New York price got into this FVG inside the expansion leg and then rejected that, and then from there what happened? It started to gravitate lower. Wherever you can target, that is depends on how much you want from this market, from these markets. So that is the first thing. After you mark the key PDRA, price has rejected the PDRA. You have to be patient for price to reject that PDRA. Sometimes you just price taps into a PDRA. Maybe it's a 4-hour candle. You just enter directly in a 4-hour candle. For that candle to close, it takes 4 hours. So it can go up and down, and even come take you out and then now move to your direction. That's why I always insist you better miss a move by doing the right thing, other than rushing and getting your stop loss hit. So patience is okay. Patience is a virtue that you need to learn and accept that you need to be patient. Sometimes money is made in patience, not when you rush into doing things. So that is it. That is the first case scenario. A higher PDRA time frame going to lower time frame, looking for the market structure shift, and SMT and all that, and then you can now frame your trade inside kill zones, right? Yes. Now this is on the Thursday. Maybe you could have even targeted this low here and you take your profits, or this PDRA here, swing low here, take your profits. The moment price, if you enter from here, the moment price closes below this low here, trail your stop loss to break even, or take a few pips away, pay yourself and let something small to run and see whether you can book more profits. Now look closer to this one. This is on Friday, right? Now you remember, we know Thursday has capped the end of the week. What we are anticipating is Friday to continue the move lower. Look at that. Now I have sent charts, many of them explaining this. If you are anticipating a down movement, you can even draw a line. You can even draw a line to represent the New York midnight open on 00 Friday, like this. So if I'm going lower, I want to see price open higher to go lower, open high, low, then close. So when it's opening high, what am I looking for? If there is previous liquidity, buy side there, look at that. It opened high, took out a buy side liquidity, and then it dropped. See that? This is a 2022 model here. Open up lower, displacement smaller, market structure shift there, fair value gap entry. But I'm not entering this trade there. Why? Because this is outside the kill zone. Patience. You let what? The trade run. Now, so with the indicator on, you see now we have London session there. Price moves down, comes up to what? Look closer here, guys. What is this? That's a fair value gap. So price comes back, fills that fair value gap, and then rejects that. But before taking tagging our PDRA here, what is this? A short-term high. Price took out that. So the up close candle that took out that, liquidated an old higher low. That is another block. I think you saw that from a video I did on that. So now you can be a seller here, or you wait for New York session. Now you can confirm that price took out liquidity during New York midnight open and then came down. London likely to make the high of the week. Then what do I anticipate? New York reversal downwards. No, continuation rather downwards. So what do you have there? That's another block. So this can be your entry there, because we are inside then the kill zone, and then now you let the trade do what? Run. You see that? Now when you want to take your profit, let me do this. Target session highs and lows. You can target here, you can target here, you can target this one here. You see that? And the price actually took out this. So sessions highs and lows should be your best target zones, areas. If you have a problem, where should I target? Just turn this up on and check where the session high and lows are, depending whether you're buying or you're selling. Those areas are enough for you to get your pips booked. So guys, that is a summary of a simple way of how I determine buyers. My work is just to tag a higher time frame PDRA, wait for price for that candle to reject that PDRA before I start even thinking of acting. Then all the time I'm working within or inside kill zones. I don't have pressure. My work is just to be, because you see now from here all the way, just my work is to work London session, anything, nothing, okay. New York session, and then you know what did London do? New York did that. If there's a setup during London session, you can take that and scale in during a New York session. So this is the second episode on how to determine buyers. Just mark that key level, wait for price to reject for that 4-hour candle to close, move to lower time frame, look for market structure shift, look for CISD or SMT, and then there you are. But most of the time I've told you, if it's Thursday, then think like a trader. It's likely to trade into the range. I'm not saying 100% it's going to do that. Yeah, so up to this level, guys, I wish you well, and see you next time.